Hey traders, happy Monday everybody. Welcome to Charts and Coffee. Great to see everyone. Glad you can make it. Hope you had a great weekend. We're just kind of grinding our way through the remainder of December. And one of the things that we've been doing quite a bit of we've been shortening the time frames quite a bit while this market's trying to figure out whether or not Santa's coming. I think Santa's coming, but let's get into what we're seeing. Let's trade what we see, not what we think. And as always, this show is about your questions, so keep them coming. Just a quick reminder, however, be sure you're checking out the economic calendar. You don't want to get blindsided by those scheduled events. These hot zones are going to create the volatility explosions that oftentimes can be what propels your trade to an initial target, what maybe gives you a pullback you've been waiting on. So we've got some interesting data out this week. We got PPI tomorrow. I'll kind of scroll down into Wednesday, retail sales. And then as we go into Thursday, it's actually a fairly light calendar towards the end of the week. However, that being said, if you've been playing the dollar as I have, as we have been in the futures room and in the Sector Secrets Mastery, this ECB press conference could be an important one because that could create the euro volatility that will in turn create our dollar volatility. And so definitely worth keeping an eye on that. But overall, I have to tell you, it's a pretty quiet calendar. And just make sure I usually will write down on the planner. If I don't write it, it doesn't get logged into my head in any way. So I'll write down on my planner, hey, this is what's coming up. I can plan ahead. And I usually try to keep a week or a month at a glance on my trading planner, on my trading journal. All right. So with all that being said, let's jump into the questions. All right. Battlehawk, crude oil. Sure. So jumping into crude, now there's a couple ways we can do crude. In fact, I'm going to use some trade station charts here today. So let's jump into crude because this is going to allow me to share some initial margin conversation, some contract conversation, the specificity of which contract, open interest volume, things that are really important to us. So let's go to the daily here to start off with. Now, one of the things that I love to run on my trade station charts, and do I not have them running right now? One of the things that I love to run on my trade station charts is the futures info. Now, this puts a margin on the right side of the chart. And for new futures traders that are just sorting out volume and open interest and expiration, things like that, it's really, really, really helpful. You'll notice that the open interest is sitting in the G contract, not the F. All right, so keep that in mind when you're looking at the contract month. If you're looking at something other than a day trade, if you're day trading, stick with the F contract. If you're going to be looking at a longer term possible trend follow, consider G. And that's exactly what we're doing. We're looking at a short in crude. So I think it was last week on the Simpler Trading YouTube channel, I did a free video on what the next trade with crude oil is. And I forgot what I called it. I should have called it oil slick. But what we're looking at is a downtrend, or at least one that's starting to organize as such. And I'm looking for potential movement to the downside. So that's what I've got going on, particular contract, because look, one of the key concepts of all the trading that I teach, whether that be day trading, whether that be overnight trading, is we scale into our trades. But I don't mean add, right? A lot of traders add to trades as they move against them. That's not something they planned ahead of time usually. Scaling implies that there is a zone that we have pre-identified before we get into the trade. And as the market moves down into that zone, deeper and deeper, say into a dip zone or higher into a retracement short zone, we will add, right? Add to our position. Well, we'll scale in. And the scaling also has a predetermined budget and predetermined percentages that will buy at each one of those triggers. So scaling is very different than adding to a trade. And right now we pretty much have scaled into an aggressive level on that crude oil trade. So thanks for the question, Battlehawk. All right, moving on. What about wheat and Nvidia? Eclectic. I like it. So wheat has been probably one of the more unusual grains that we've been dealing with because it's been, for the most part, kind of strong. As of recently, you can see it broke the wave. Now, I'll tell you this, and this has been kind of the way that I've been trading futures and commodities alongside equities, ETF and equity options, is that I have not been wandering into softs and grains and meats in quite the same way that I might have during the reflation trade. And remember that if you're predominantly an index trader, you're trading metals, energies, currencies, treasuries, there's a certain synergy in those markets. And there's a disconnect. It's a total disconnect, really, unless we're in a reflation trade, when it comes to softs, cocoa, orange juice, cotton, or grains, beans, wheat, corn, and meats, right? Your cattle, your hogs. So I don't find myself in these trades as much as I was during reflation, 1K pipes. But I will tell you that right now, I can't say I love what I'm seeing in grains. And so I'll tell you for now, it's either a fade buy when we get down to an oversold support level, but it would be a buy, or I'll pass for now. The second question is Nvidia. So as Nvidia pulls back to the wave, and let me get my drawing tools out here. As Nvidia pulls back to the wave, right, like it has done before, and doing again, right, when we get this kind of pullback, that's something that I will define as buy the dip, right? Buy the dips become a meme. Buy the dip, it's lost in many ways its essence, its meaning. Buy the dip is valid when we have an uptrend. And however it is you are defining your trends, I do it with the 8, 13, 21, and 34 EMAs. And when those are green, I will buy the dip. So we're in a buy the dip environment on that one. Hey there, James. How are you? AMD. All right, let's get to it. Looking at AMD. So this is where some of the transitions in the market can be tricky, if not a little bit frustrating. And when we take a look at the transition now to a non-trending market, please remember the greatest influence in terms of direction is going to come from the trend that preceded the chop. We're in chop right now, yes, but I'm still going to be looking for that area to act as support, the wave possibly to have some gravitational pull, and I'm looking for a buy. I mean, what I want to do is be a buyer. All right. Is this the best kind of market environment, market structure to focus on? No, I can't say that it is, but it is a buyable one. And there's enough bullish pieces lining up to tell me that this could be a nice buy. So I would definitely take advantage of the weakness. I would definitely look at getting long calls. Give yourself some time, James. You know how we do it in the mastery room. This would be valid. Absolutely, my friend. Yeah. So the main thing with something like AMD, though, just sort of throwing it out there, is where is AMD within this passive trading universe that we're in? And are we always considering what some of the sort of larger influences on the stock can be? I don't just mean the index, right? That's an easy one. How does the S&P, the NASDAQ, and the Dow, how are they going to influence a stock? But I mean also, how is SMH going to influence AMD, right? How is SMH going to do it? Because when we think about AMD, we know that AMD is about 5% weighting within the SMH. And I don't know what's on my eye today, but 5% weighting within the SMH. So I'd like to see AMD and the SMH in sync. That's going to be the tide and the boat moving in the same direction. So good stuff, James. All right, moving on to Steve says, good morning, Raghee and Santa. I am looking for Santa. I am. Remember, the Santa rally is really that. Let's take a look at the calendar here. Santa's not going to show up till after Christmas because, well, he's got stuff to do between now and then. He's making toys. He's, checking the transmission fluid on the sleigh, getting the reindeer bulked up. They're training. There's a lot going on. So Santa's really going to be very much at window dressing rally between the 27th and 31st. That's where we want to remember. We could see that third push of the three phases between basically Halloween to New Year's Day. This would be that third and last push as we round out the year. But now remember, this is not going to be, I don't believe Santa rally is always, we shouldn't assume it's going to be a broad-based rally. It can also be, a rally of strength, which is where the window dressing conversation comes in. Are we going to see a Santa rally rooted in names that are already strong and are likely to continue to be strong? That means, watch for XLK and ITB, XHB, XLRE, SMH, but also be cautious. Don't go bottom picking, right? Don't look for sector rotation. XLC, IYZ, that's going to be a January conversation. So yeah, Steve, I'm with you, friend. All right, Bank of America. So that's an XLF conversation. Look, it's really difficult for me not to like some of the financials just broadly because of the interest rate trajectory. We have a nice volume ledge we're sitting at in Bank of America, but I'd really like to see the XLF move higher. Again, tide. And then, if we want to go up one more level, that takes us to the S&P. It also takes us to the DIA. Remember, the number one weighted sector within the Dow are financials. The number, 2 or 3 weighted sector within the S&P, financials. So heads up, we want to see the tide on this one, but I would be long or nothing. I'm with you. And I think, to look at Bank of America alone and ignore the likes of Schwab or ignore the likes of CME, which I think I like the best. Keep an eye on those as well. They're all part of that same conversation within the XLF. Okay. Yeah, Taz, I say quiet from thank you. Well, what about the FOMC? Yes. No, I'm talking just data points, but you're absolutely right. No, I didn't mean to just completely ignore Kapowell and company. No, absolutely. Absolutely. Did she not drink her coffee this morning? No, absolutely. But if you've been watching the free videos over at the Simpler Trading, you gave me a good chuckle there, Taz. If you have been watching the videos over at the Simpler Trading YouTube channel, the free ones that you can check out before or after Charts and Coffee here, on Friday, I did a deep dive into what it is. Oop, that's not the video. What it is that I am looking at to measure. What's the decoder ring? It's here, right? What's that decoder ring? How do we decode what the heck we think is likely to happen? And so I walk you through my decoder ring for that. And so if you haven't checked it out, you can see that from Friday's video. So absolutely, that is definitely in my mind. I guess we've been just bludgeoned with just this fed on the 15th. But yes, you're absolutely right. Moving on to the next question. What would be a buy level for a pullback on the dollar? I like the question. So I need more. 21 exponential. You'll see I've got this alert parked on the Trading View charts that I like to use so much. Love these charts. So yeah, you can put something over at say 2580 as an alert. 21 exponential moving, not 2580, sorry. Um, 21 exponential is going to probably be about 68, 2068. It's about where you want to be paying attention. But the 21 exponential moving average, which clearly, there we go. There we go. So that's about where I want to be focused on when and where UUP might be an opportunity. The only reason and most of you know, when I'm trading an ETF that has a futures alternative, I'd rather watch the futures contract. But since this futures contract trades on the ICE and a lot of traders do not have access to it, that's where I'll say watch UUP, or even better, watch it on the 6E. When the 6E gets up to about, I'd say you're probably looking now at about, 136 and change, just north of the 136 handle. You can short 6E. You can get long puts the 6E. That's the Euro FX. You can get long FXE puts. So FXE, UUP, they're really just a very strongly negative correlation that we could take advantage of. So, so good stuff. Yeah, Kathy, I'm looking at either the dip to buy on the dollar or the rip, the rally to short into on 6E. And I think for a lot of traders, that 6E might be something you'll want to take a look at. Okay. Next up is the Tesla. Okay. So I don't want to short Tesla. As a general rule, I don't. Never short a fanboy stock. And I'm not making fun of Tesla. I'm saying that don't short a stock that, the CEO is still at the height of his influential powers. There is an oversold buy opportunity to be had, I believe, in this stock. There's your Darvis right there. There's your Darvis signal right there. So I think it's legitimately a good Darvis rally. I think it's an overall bullish. I mean, my gosh, am I going to really want to pick a top on this thing? Just don't want to do that. I think it's very hazardous to assume that stalls in a trend are some sort of precursor to a reversal. The probability that stalls in an uptrend are actually reversals is a lower probability than just presuming it's likely to continue. And that's the way I look at all trends. So yeah, I'm looking for that to continue. I'm looking for that to continue. All right, next up is APHA. Taking a look at apps. It's a short the rip. Yeah, that's a short the rip. Double red grab, south of the 200. That's a short the rip. Yeah. What about gold? I would love to have some clarity on gold. We have some real yield clarity. I think that's emerging, but gold is still below the 200. Gold is still below at least I'd say about the July, August point of control. Be careful with gold. Yes, I want to buy it. Yes, we have some very cool Darvis levels that we can look to, which, in that area would probably represent a pretty nice oversold buy, but just not there yet. It doesn't have a trend. It's a tricky one. What I'd say I probably like, as long as we're talking metals, is copper off the 200 again. That 200 in copper, that's been a pretty nice level to watch. I'd keep an eye on that, especially if Santa's going to show up. Michael, Moo would be a 200 conversation, maybe a January conversation. ADM, Moo, Deer, they're all kind of in that same bucket. Yeah, be careful with those. I think there are better looking structures that we can focus in on as we wind down the year. All right, next up, Roblox, RBLX. It's an uptrend, right? It's an uptrend. So let's go through the pieces. Step one, structure. Structure always before strategy. Please, please, please. If there's nothing else you get from coming in to caffeinate and dominate with us each morning, structure before strategy. Structure dictates strategy. And then that means that as of this point in time, we've got an uptrend, double green, 8, 13, 21, 34, telling us the dips are buyable. This, of course, is a dip, and a gorgeous one at that. So I want another one of those. Send another one of those over the plate, and me, the batter, I'll definitely take a swing at it. So buy the dip for sure. Remember, there's two ways to play an uptrend for most market participants. They're either looking for the dip. By the way, as much as that's discussed, most traders don't buy the dips. They don't feel comfortable buying into the support. What they like, actually, is to buy the bounce. And there's nothing wrong with that either. It's just not the way that I like to trade. I'm a dip buyer. Now, if you want to wait for the dip and then sort of the escape velocity back out of that dip, that's a buy the bounce. That's okay too. I think there's certain patterns and indicator readings that'll help with that. But I like the dip. I don't mind to identify the zone in, as we talked about earlier, scale in at those predetermined aggro, moderate, conservative zones. You all know that whether it's day trades, whether it's end of day, scaling in is a key part of what we do. We talk about scaling in the market money math class. That's quite a few years ago. Remember that when you scale in, you're thinking about budget, you're thinking about risk, and you're thinking about the distance from your entry to your point of validity so that you can better manage what that unrealized heat could represent in terms of a negative to your account. It's really, scaling in is really about money management. Scaling in is really about position sizing and risk, which is really all the same conversation. So yeah, I agree. It's a buy the dip, and that's absolutely, I'm with you. Spot on. Apple, oh my gosh, Apple's obviously launched. It's parabolic. I think our better shot might be maybe not even XLK, maybe Microsoft. What is trading within the XLK as Apple is moving higher, XLK is moving higher? What might play catch up as we wind down the year? It might make sense to take a look at some laggards. And I'm trying to see if I have this written down on my notebook. Yeah, it might make sense to look at laggards in the XLK. What are laggards in the XLK? Because if the overall tide is moving higher, that could give you a nice opportunity. Normally, I don't want to chase laggards. Normally, it's all about relative outperformance. What is the best of breed within that niche, within that sector, within that index? But as we go into the end of this year, specific to XLK, that might be a good one to think about. All right, my friends, and just like that, time is up. Boy, that 20 minutes goes quick. As always, thanks for being a part of the Charts and Coffee crew. I'll see you all tomorrow. We do this Monday through Friday, 9 to 9:20 or 9:22. But we do this Monday through Friday. I'll see you all next time. You can catch up past episodes and also those free videos I talked about over at the Simpler Trading YouTube channel, as well as more videos describing a lot of the tactics I'm teaching over at countdowntrader.com. All free resources. Enjoy. You can get a number of my free indicators at Countdown Trader as well. I want to equip you with all the stuff that will help you follow along with the way that I look at the markets. Be good to each other, gang. I'll see you tomorrow.